What if I told you that you could earn a great return, invest into a safer asset, and do a whole lot of good all at the same time? Well, if you'll stick with me for the next few minutes, I'm going to show you exactly how you can do that. My name is Jason Stubblefield, and my company has been invested in apartment buildings since 2016. I'm very excited to share with you what we are doing now with affordable housing. So, what is affordable housing? When most people think about affordable housing, they think about Section 8, they think about rundown, or dirty, dingy properties that don't look that great. But that's actually not affordable housing at all. Affordable housing can be A-class properties, B-class properties, even some C-class properties that can be built brand new with a wonderful tenant base. My company is focusing on those nicer type of assets. When you think about affordable housing, what it really is just a reduction in the amount of rent that the tenants are asked to pay. So for instance, I am in the Atlanta area, and for here, about $1,200 is where they try to cap rents at. So if you are going to be renting a property, what affordable housing would say is we don't want that property to cost you any more than $1,200 a month. So who are these properties for? We're talking about the hotel clerk, the restaurant host, the child care worker, firefighters. Those are the type of people who we are catering to with these properties. So why do we need affordable housing? You have people who are making $45,000 to $60,000 a year who just aren't able to afford $1,800 and $2,500 in monthly rent. So we need affordable housing to cater to them, to give them a nice, clean, safe, affordable place to live without charging them too much money. You may be aware that as rents have continued to increase, wages just haven't managed to keep up. So we have this dilemma right now where people are working jobs and needing a nice place to stay, but they just can't afford it. All right, so I'm gonna briefly explain how affordable housing works. The government tries to step in and help provide affordable housing, and they do that by providing tax incentives. So you have institutions like Wells Fargo or Bank of America, or even now Amazon. And what they will do is the government will offer tax incentives or tax breaks to these companies through tax credits. These companies work with the government to provide the financing for these projects. So the institutions get a tax break, the government issues tax bonds, and they come together to form a partnership. That partnerships allows new construction properties or even some existing properties to stay affordable because the project cost has been subsidized. Those subsidies are what allows the projects not to be so expensive to the tenant. So here's how this comes into play with my company, right? We're focusing on preserving affordable housing. So we've been doing these deals. Actually, I felt bad because we've been sort of part of the problem. We've been doing value add deals, and even though that has been successful for us, we want to be able to do more and sort of give back and contribute to this affordable housing crisis. So what we're doing right now is trying to preserve these affordable housing assets. What we're doing is buying value add B-class assets where we can preserve affordable housing. Okay, so now let's talk about some of the benefits of affordable housing. Not only are you able to help a community out by keeping rents limited at a certain price, but there's also benefits to the investors and developers of these deals. One of those being better debt terms. So we're able to get loan amortizations out to 35 and 40 years. We're also able to get cheaper terms. So usually we can get a few basis points lower than what the typical market rate deal might get. Also with these projects, there's a lot of capital that gets injected to make sure that these are pristine properties. So where your normal value add deal may have been putting in $6,000 to $8,000 a year, when the government comes in and subsidizes these properties, we're talking about $25,000, $40,000 per unit to go in and make these properties look absolutely immaculate. You got a stable or constant tenant base. Because these units are in such short supply, the tenants who need these properties are in endless supply. So a lot of times these properties have a wait list of tenants who are looking to be able to get into them. You get to capitalize off of a safer asset that will allow the returns to be strong, if not even better than some of the market rate deals, all while doing a lot of good for the community. Also, you got government assistance along with nonprofit assistance. There is the recognition that this is a United States crisis. And so a lot of entities are now trying to come together and see what they can do to help support it. So if you're investing in something like this, you also not only have all the benefits that I mentioned earlier, but you also have the added benefits of nonprofits that will support it and governments that will come in and try to help you along. So with all those programs that are there to help assist, it could be better than some of the market rate deals that you've already been investing in. Now, if it's got its upsides, it also has to have its downsides, so let me tell you a little bit about that. Some of the downsides of affordable housing is working with the government. Governments can be slow, they can be uncertain. So we have these programs and these projects that the government will work with us on, but we don't necessarily have a strict timeline of when the money will come in. We don't necessarily know if the program will get funded or not. These projects can be slow, and oftentimes it can be a little bit complex, which is why I'm trying to make a video like this to explain it to you. So how will our model work? We have a two-pronged approach. First, we're going to try to do the property as a tax credit deal. How would that look to you? Imagine doing a flip where you already know who the end buyer is going to be. That's what we're doing with these apartments. So we're buying the apartments with you, the investor. You get in the deal, we're going to own it for a short period of time, call it 1 to 3 years, while we go through the government approval process. Once we get approved, we already know that institutional investor is going to like our project and it's going to get accepted. You will get a return while we own that property. Cash flow will be kicked off. Value add will be implemented, and you'll earn your return as well as a boost once the institutional investor comes in. If we aren't able to get the government subsidies, then that's when the second part of our project comes in, which is more like your typical value add. We view these properties in two ways. We want to see if they work as a tax credit, but we also want to make sure that we aren't putting ourselves or you in jeopardy if we don't get the tax credit. So if we aren't able to get the tax credits, then we operate the project like your typical value add deal. It's still going to have subsidized rents, and we specifically look for properties that have value add potential in that. So for example, you may be able to have a property where the rents are $800, but they could go up to maybe $1,000. It's still less than that $1,200 government limit, and so that gives us our value add potential. If you participate in a project like that, we do value add, but our projects have the added benefit of being able to have those other things like better debt terms. We still get those, better loan terms, better interest rates, and also getting soft funds. So like nonprofits may want to participate and contribute some capital, so we have a better capital stack to go out to help us do these deals and provide a better return to you. So what are some of the benefits to you, the investor? You have the potential of earning returns that are just as good as your market rate deals, if not even better. You have a little bit more safety. You've got government funds that are with it. You've got other programs that are here to assist. You've got a strong tenant base in an asset that is definitely needed right now. And you've got a shorter hold period if we're able to get the tax credits. It's only going to be 1 to 3 years. All that combined with knowing that you put your money into a project that's going to help the community, earn you a return, and do a whole lot of good at the same time. So I've gone over a lot here, but what I want you to know is affordable housing is a national crisis, and with your help, you can be a part of a solution. So if you like to do a whole lot of good while earning a return and benefit lower income families, then I am glad that you are listening to this video. If you want to help be a part of this, then if you will send an email to info@SNS Capital Partners, that's info@SNS capital partners and put in the subject line Affordable Housing Ally. Then we will put you in our list, we'll have a conversation and show you how you can be a part of this mission that we have. Thank you.